Today, we're answering a super common question. What's the difference between a stock and a bond? Understanding this is one of the most important building blocks for becoming a confident investor. Let's break it down clearly and simply. When you buy a stock, you're buying a small piece of a company, literally a share of that company. That means you become a part owner, or what we call a shareholder. Why do companies sell stock? They do it to raise money, maybe to expand, build new products, or pay off debt. In return, you as an investor get a chance to share in their success. As a shareholder, you can make money in two main ways. Capital gains, when the stock price goes up and you sell at a profit. Dividends, some companies share a portion of their earnings with investors. You can check out this video if you're not familiar with dividends yet. But remember, stocks are volatile. The price goes up and down depending on market conditions, company performance, and even investor emotions. So in short, stocks equals ownership and higher risk, but potential higher reward. Now let's talk about bonds. A bond is basically a loan that you give to a company or a government. You lend them money, and in return they promise to pay you interest regularly, called the coupon. Return your full investment when the bond matures. Bonds are seen as more stable and predictable, especially those issued by the government or large corporations. They don't offer big profits like stocks might, but they can provide steady income. In short, bonds equals lower risk and steady income, but no ownership. Let's use a quick analogy. Think of a stock like owning a coffee shop. You share in its success or failure. A bond is like loaning the coffee shop money and earning interest. You don't own it, but you get paid for helping out. So, which one should you invest in? Stocks or bonds? If you're young, have time, and can handle risk, stocks could offer more growth. If you're nearing retirement or want stable income, bonds might be a safer bet. Many experts recommend holding both. That's what we call diversification. It helps balance risk and reward so your investments are more stable over time. Quick tips for beginners. Don't try to time the market. Invest regularly. Start small, stay consistent. Use index funds to get a mix of stocks and/or bonds. Reinvest dividends and interest if possible. Now you know the difference between stocks and bonds, and how both can play a role in your financial future. Comment which one impressed you the most.